Recording in progress.
Yeah, Miss Mary will start the class. So definitely.
हाँ जी अशोक जी हाँ yes you can start. Okay, hello students, welcome to the live virtual revisionary classes of income tax intermediate paper 3 section A. So basically student, this class is for September 2025 examination, and along with that the students who are going to appear in January 26, these revisionary lectures will be relevant for them also, since same Finance Act, the amendment made by the Finance number 2 Act 2024 is relevant for both September and January 26 examination. Student, our LVC live virtual classes, we are full-fledged this paper we have covered. Only 2 classes are left for that virtual classes, live virtual classes. And in the revisionary classes, what was the purpose of these classes? To just practice your more and more questions, because in the live virtual classes, our purpose is to make you understand the provision and to make you understand the problem which is given in the study material. But in this revisionary classes, we will take up the question. Faculty will guide you how to write the question in the descriptive descriptive part, how to write the questions for the descriptive part, for case scenario based, how to practically integrate different provision to drive the correct answer in case of case scenario based MCQ. So the purpose of LVC and LVRC is very different. But student, for this revisionary lectures, it is very important that you just understand and do a revision of your income tax portion. Because in the revisionary, only questions will be taken up by the faculty and the concept will be cleared through the help of the questions. So faculty will take some important questions to make you understand the provision, but the main focus will be on the practice. So if any concept is not clear at that point of time, you can ask the faculty, but it is better if you practice and revise your study material, your syllabus, your coverage, everything before taking these revisionary lectures. So among the students who have attended the live virtual classes, which is already going on for this paper, just raise your hand. Okay. Okay, so many same students are for both. So definitely this revisionary classes will add on the values for your provisions, because different questions will be taken up in these classes. The question which have been taken in the live virtual classes, that is different, and more questions will be taken in the revisionary classes. The schedule of these classes are already hosted on the website. If I'll say your 9 chapters are there in this paper, and if we segregate the units, so there are total 13 in the count if I consider the units separately. So for this, all the topics of this 13, I will say the more chapters, divisionally classes has been allotted 7 to cover these 13 chapters. The schedule is already hosted on the website. For this, in this class, for today's class, our faculty CA Ankit Sharma sir, he will take basic concept and residential status. Both the topics chapter will be covered in this classes. All the questions, case scenario based MCQ, descriptive portion, sir will try to explain the provisions covered in the basic concept and residential status. I have got one query in the chat box. Let me see. Okay. So students, because in the initial, if you have any journal query regarding this paper, I will definitely happy to take the query. Otherwise, we will start the session and sir will take the questions to go through the chapter 1 and chapter 2. So if you have any journal query of this paper, you can please ask me. No general query. Everyone is aware about this paper. 50 marks papers are there for this income tax. 15 marks is for MCQ, meaning 35 is your descriptive portion. First portion is your compulsory portion, and the remaining out of 3 question you have to attempt any 2. So there is external choice of one full question, and there will be one internal choice also. So this is the basic paper pattern of this paper, income tax. Sir, I guess I don't think the student have any general query for this paper, so you can start the session, that technical session for practicing chapter 1 and chapter 2. So I'll.
Yes, ma'am. We can start that.
Okay, sir. Over to you, sir.
Okay. Good evening, students. I welcome you all in our income tax revisionary class for your September attempt. So in this talk today, we will be discussing the chapter number 1 revision class and chapter number 2. Chapter 1 was for basic concept, in which we have been gone through with the introduction part of income tax, the definitions of income, person, HUF, etc. The previous year, assessment year, black money cases, those provisions we have gone through in basic concept, in the theoretical part, and the numerical part consisting the rates of tax under default tax regime, under optional tax regime, the complicated surcharge provisions were there, then rebate concept was there, then education and other cess also was there in both default tax regime and optional tax regime. So we have gone through with those provisions under chapter number 1, including agricultural income, non-agricultural income provisions also, and the chapter 2 was covering the residential status and scope of total income, in which we have to find out whether a person is a resident or ordinary resident, not ordinary resident, or a non-resident, because it is very important to find out the residential status for the implication of taxability of different nature of income. So if you earn any income in India, or it's earned outside India, is it received in India, received outside India, whether business controlled from India, outside India, etc. So the taxability of these kind of income will depend upon the residential status of a person. So we have gone through with the provisions of basic concept, chapter 1 and chapter 2 residential status in the full classes. In today's classes, we will focus on to solve multiple questions related with these basic concept and residential status chapter. These questions would be from your MTP, RTP, and some case scenario basis question also would be discussed. So if you have any query in a question, the provision what I am going to discuss with you, you can ask those query. And of course, that is going to be an interactive session. I would also ask question from you, and you have to find out the residential status or the answer. I've also asked in the last class, yesterday class, that please go through with the provisions of basic concept and residential status. If you have revised those chapters, then let me tell you, these topics is going to be feel that they are so easy for you. So please do revise before any revisionary classes. That is your responsibility. That particular chapter need to be revised by you so that you can get the maximum benefit for these revision classes. Okay, now let me see. Muskan is saying good evening. Good evening, Muskan.
Sir, yes, sir. Sorry to disturb you. Actually, I was just in the chat box. I received a query to again explain the question paper pattern. So I'll take a minute to explain the question paper pattern. So, student, this paper, your paper 3 of 2 parts. One is section A, your income tax law, and this is section B, your GST. Section A, income tax law, that is for 50 marks. If you see the mock test paper, then if you see the pattern, your 15 marks, your 30 marks is assigned for the case scenario based MCQ. So in this income tax paper, since the paper is of 50 marks, 15 marks is for case scenario based MCQ, and for 35 marks descriptive type of question will be asked. In that case scenario, there can be one case scenario, there can be 2 case scenario, but the total there will be 15 marks case scenarios based MCQs. And in that case scenarios, no reasoning is required to be provided, and there is no negative marking for the wrong answer of the MCQs. Regarding the descriptive portion, your first question will be the compulsory question that will be of your 15 marks. So out of 35 marks, 15 marks is your compulsory question. And out of them, for remaining 20 marks, there will be 3 questions of 10 marks each. There will be subpart like 2A, 2B, 3A, 3B. So there will be 3 questions of 10 marks each, and you have to attempt any 2 out of these 3 questions. Then in the one question, it can be from 3, 2 or 4. Generally it is from 4. There will be one internal choice also, that in suppose in question A there will part A, 4th A, 4B and 4C. You have to attempt any 2, or 4B mein there is a alternative key, you can do the second alternative instead of the main question. So internal choice is also there. So this is the question paper pattern. If you see the mock test paper of May 25, because since May 25, September 25, same Finance Act is applicable, you will understand better what is the paper pattern. And for this September 25 also, we are coming with the mock test paper. That series is starting from 21st of July. So please attend that mock test paper. If it is not possible to attend at the physically in the branch, then download it from the website also and try to solve the questions after your revision has been completed. Okay, student? Okay, sir. You can continue, sir.
Okay, ma'am. So Ishant Jain is saying, but if we do not have timetable of which chapter will be taught, we are unable to revise. So I kindly request, please give us a timetable. Timetable, I guess that needs to be decided by you. But the schedule has been already uploaded for the revision topic. You can go on the BOS portal or the application, and you can see the schedule of revisionary classes has already been uploaded there, Ishant. Okay. So those who did not clear, or those who are not successful in the result, please do not depress. Please be confident that it's a journey. It's not ended over it. So it's, even if you have not successful, please remember these words: try better, fail better, and one day you will be successful. So if you are not going to leave this course, CA, the CA course is not going to leave you. So please be confident, find out your weaknesses, work on it, and definitely you are going to be successful in the next attempt. Okay, so now we are moving on to solve the questions one by one. And the first we are discussing question number 1 from MTP series 1. To solve any question, the first and very important thing is to understand the question. So if you are not able to understand the problem, you won't be able to find the solution also. So whenever we are going to solve any question, we have to understand the question firstly, that what is the requirement of question? What is the information which needs to be used in that specific question? So now we are having a question in front of us, and you can see the question says, Manisha is a research scholar pursuing her PhD. She is unmarried and her parents are living in Ahmedabad, Gujarat, of course. Her parental grandparents and other family relatives are staying in South Africa. She was in India with her parents till May 2020. So till May 2020, she was in India. May 2020, and of course, before this date, she was in India. After then, she went to London for the further education. So the purpose of going outside India was education. We can assume that she is a citizen of India because she was in India till May 2020. In October 2023, she returned to India. On 28th March 2024, she traveled out of India. So she came back into India on 23 October and went outside India on 28th March 2024. So first of all, you should understand, we are going to solve a question for previous year 24-25. So initially I have to check it out whether that specific individual was in India for how many time or how many days during this particular time duration. That would start from 1st April 2024 till 31st March 2025. Till now, there is no information regarding it. Fine. For her research project in Khadi Business Exhibition, she returned on 1st of October 2024. So she came back into India in my previous year on 1st October 2024 to participate in the 155th birth anniversary celebration of Mahatma Gandhi. In this connection, she attended numerous events held all over India. You can see in a question, it is not important that every information is going to be used to solve any numerical. In this question, you can see multiple informations are given, but out of these information, most of them are non-relevant. The purpose for which she came to India, etc., while also holding exhibitions for her textile business in Khadi, the fabric that breathes, the livery of freedom, etc. She won accolades and awards, gifts, and donation in the course of showcasing her work. You have been provided with the following data in respect of her receipt and income for financial year 2024-25. So the relevant information which has been given to me was this information, that what time she came into India in my previous year, and that is from 1st October 2024. There is no information yet that when she went outside India. Okay. Now there are some income information for her work. Scholarship for pursuing her research work, 4,80,000. Okay. Gross receipt for exhibition held in South Africa and collaboration with the leading fashion houses. The gross receipt, not income. Okay. Gross receipt from exhibitions held in India, it's 12 lakh. Gross receipt from sale of honey in the exhibition in India is 1,05,000. Gross receipt from sale of handmade khadi designer fashions, of course, 2,25,000. Gift from father's sister, whom she visited in Johannesburg, South Africa, 51,000. Cash gift from friends, 27,000. Received share of income from HUF, 22,000. The 9th point is giving the details of purchase or expenditure as point number 1, 2, 3, 4, and 5. Technically, point number 2, 3, 4, and 5 was giving the detail of receipt. Now, point number 9 is giving the respective expenditure. Cost of material for exhibitions held in South Africa, 12 lakh. Handmade khadi cost, 1 lakh. Other expenses for business, 4 lakh. Honey expenditure is 55,000. Now, point number 10. Mr. Patel of South Africa gave her a check of rupees 5 lakh, favoring Gandhi Smarak Trust as donation to the trust. She was requested to hand over the check to the trust office at Ahmedabad. There are some notes also given, and after that we will see what is the requirement of question. Manisha does not manufacture any of the khadi products. She sources all the khadi material, accessories, products, and honey from suppliers. Technically, she is doing trading. She is purchasing it from India and selling it out. Okay. All financial transactions are carried out in account pay check, and TDS has been deducted wherever applicable. So this information could be for our use, that it's for trade. The all payments are via checks. Trading is also an information important. Check payment is information. Her parental grandfather is the Karta of the family HUF. Her parental grandfather comes on visit India for 6 months every year since 2014. The HUF is managed outside India, and all decisions regarding the HUF are made outside India. So this is the information which could be relevant for HUF purpose. Manisha has opted out of the default tax regime under section 115 BAC. So she's under optional tax regime. Now let's see what is the requirement of question. This is a case scenario based question. Now the first question is, what is the residential status of HUF for assessment year 25-26? Now before solving any question, I always say that there are 3 parts for solving any question. or we can say there are 3 steps to solve any question. The first one, to understand the question. You have to understand the question. Like to solve any problem, you have to listen it first carefully. What is the problem? So that is the understanding of question. The second, now you have to apply your brain. To solve that problem, you have to apply the brain. That means you have to recall the provisions related to that problem, what you have gone through in step number 1. So you have to process that problem as per the relevant provision. And when you are able to apply those provision into the problem, then you will have your solution. Majorly, I see that students generally skip this process. They just try to understand question and they just reach on the solution. So that could be a mistake. So kindly refer to the provision always if you understand the question. So now the question is, you have to find out the residential status of HUF from this information. Point number 3 was the information regarding HUF. So before solving this question, before reading out the option, whatever we have, first of all, you have to think what are the provision for finding out the residential status of an HUF, of a HUF. So it's based on control and management. And it says if whole control and management, if outside India, then that HUF is going to be regarded as non-resident. But if control and management is partly or wholly within India, then it's going to be regarded as resident. And if it is recognized as resident, then we will go further to find it out whether it is a ORR, that means ROR, resident and ordinary resident, or it's a RNOR. So with the given information, what do you think? Where is the control and management? Is control is management is partly or wholly in India, or the control and management is wholly outside India? Now, after recalling or remembering these provision, now you apply this provision in point number 3. Now I know what is the provision, and after recalling my provision, now I will apply them in point number 3. And you can see the question says the HUF is managed outside India, and all decisions regarding the HUF are made outside India. So if all decisions of HUF has been made outside India, what should be the status of that HUF in India, students? Ekbaram is saying C, non-resident. Okay. Vidushi is also saying non-resident. Okay. Muskan C. Nidhi non-resident. Non-resident as per Krishna. Sunidhi also saying. Sahil also saying. Shagufta also saying the correct answer. Astha also given the correct answer. And so on. Tanu also saying the correct answer. So if you will apply the provision correctly, after recalling the provision, if you will apply those provision correctly, definitely you will get the correct answer. So the correct answer is, it is a non-resident. Okay, as simple as that. It was a simple question. Now moving further to the second question of this case. Determine the taxability of gift received by Manisha from her father's sister and from her friends in Gandhi Gujarat Seva Samaj for assessment year 25-26. So we have to find it out, whatever gift she is receiving from her father's sister and from her friends, what is the taxability of those gifts under income from other source? So you can see there are 2 gifts. Point number 6 and 7 was regarding the gift concept, what we are discussing. So point number 6 saying gift from father's sister, whom she visited in Johannesburg, she received 51,000 from her father's sister. So to find out the taxability of this point, we have to know that whether father sister falls into the definition of relative or not. To find out the answer of this question, we should know whether relative includes father, sister or not. If the relative definition under income from other source in case of gift includes father, sister, this gift is going to be non-taxable, that is going to be exempted. And if it is not so, then this gift is going to be taxable in the hands of assessee. So, what is your opinion, students, regarding father, sister? Is it a relative or not? Kushi also. Nidhi Vishwakarma is saying yes. Pooja also saying yes, father, sister is a relative. So it would be exempted. Of course, if it is relative, then it's going to be exempted. Brother or sister of either of the parents are relative. The correct definition which has been prescribed in the income from other source provision regarding relative is correct, Kushi. The brother or sister of either of the parents are going to be treated as relative. So, of course, the father sister would fall in the definition of relative, and if because she does fall in the definition of relative, that means this income is not going to be taxable. Clear? Now, the second case, if you will see, cash gift receipt from friend in Gandhi Gujarat Seva Samaj with whom she stayed while in Johannesburg, South Africa. Is it going to be exempted or taxable? So, gift, if it is less than 51,000, less than 50,000 in a previous year, that is not going to be taxed at all. So, in this situation, the gifts are not going to be taxed. This is not due to relative definition, and the other is because this is less than 50,000. So, now we have to find out the correct option. So, according to you, which is the correct option of this question number 2? Ishan Jain is saying A. No. Ishan Bist is saying D. Tushi Gupta is saying D. Nidhi is saying C. Why, Nidhi? We just discussed the concept why that is going to be exempted. The correct answer is D, students. D. 51,000 will be exempt as is a gift receipt from a relative. 21,000 as cash gift from friend will not be taxable as the total amount from non-relative does not exceed 50,000 rupees. So these both questions were easy in my opinion on the basis of the case scenario. The main question is question number 3. This is very interesting. What would be the total income of Manisha for assessment year 25-26 if she wishes to maximize tax saving? So now we have to find out the total income of Manisha. But before finding the total income, first we should know what is the residential status of Manisha. Because if she is a non-resident, the separate kinds of income is going to be taxable. Only those income, those are arise or received in India. If she is a resident, but ordinary resident, then income arises in India, received in India, or which is controlled from India, going to be taxed. And if she is a resident and ordinary resident, then all kind of income need to be taxed in case of Manisha. So before finding out the total income, we should find out the correct residential status of Manisha. So with the information, whatever we have been provided, we know she is a citizen of India. Citizen of India went outside India for education purpose, not for employment or business purpose, not as a crew member also. So because she has went outside India for education purpose and she continue visit India. So because she does not fall in the exception part, so to find out the residential status of her, we have to check both basic conditions. The first is more than equal to 182 days in India in our previous year. In short, I'm writing these conditions. You must have aware of all these conditions already. More than equal to 60 days in India and more than equal to 365 days in 4 preceding previous year in India. So we have to fulfill any of these conditions. If any of these condition has been fulfilled, in that scenario, we have to check it out. What should be her income, taxability? So you can see, I have to solve this question separately because we do not have a space over here. So in this case, you can see she was in India till May 2020. And in the previous year, 24-25, she comes to India on 1st of October 2024. And there is no information that she has gone back outside India. So we will assume she would be in India from 1st October till 31st of March. So October 31 days, she would be in India. Then November, December, January. February is not a leap year in this case, so it would be 28 days and then March. If you will total, that would be 182 days. Exactly. So you can see she is fulfilling the first condition. That was the basic condition number 1, more than equal to 182 days in India. And because she fulfilled this condition, she is in India for 182 days. So she would be a resident. Now, after becoming resident, we have to find it out whether she is a resident and not ordinary resident, or she is a resident and ordinary resident. So the first condition would be if she is in India for less than 730 days in 7 preceding previous year. Now our previous year was 24-25. Except this previous year, we have to check it out in the last 7 previous year whether she was in India for less than 730 days. That means previous year 23-24, 22-23, 21-22, 20-21. Then we have 19-20. We have 18-19 and then 17-18. She went outside India from May 2020. Before that, she was in India. She was in India for some days during this time also, but before May 2020, she was in India for all 365 or 66 days multiplied by 3 at least. So you can see because she is in India for all these 3 years. So the condition of having in India less than 730 days cannot be fulfilled anyhow. Clear? Then the second condition, that if you do not fulfill this condition, the second condition says if you are a non-resident for at least 9 or more years out of 10 preceding previous year, you could be a resident and not ordinary resident. Again, for these 3 years, she was in India. So she would be resident automatically. And also these are 7 years, the last 3 more years. She was in India for always. So last 3 years also she would be a resident. So again, I have explained you in the basic concept chapter. If somebody is going to be resident for at least 2 years, then this condition could not be fulfilled anyhow. So she is not fulfilling condition 1, nor she is fulfilling condition number 2. So she would be a resident and ordinary resident in India. I hope till now it's clear. Now on the basis of her status, now we will find out what income is going to be taxable and how to minimize his tax liability in this scenario. So because she is a resident, an ordinary resident, now according to that status, we will find out the income which is going to be taxed in her end. Scholarship for pursuing her research work, scholarships are going to be exempted. We have discussed this provision under income from other source. Scholarships are not going to be taxed. Gross receipt from exhibition held in South Africa. Now there are multiple gross receipt because she is a resident and ordinary resident. So wherever she earned income, that is going to be taxed in India. So accordingly, she is having gross receipt as per point number 2, 10 lakh. We have to find the net profit. Fine. Then as per point number 3 also, gross receipt exhibition held in India was 12 lakh. Then gross receipt from point number 4, 1 lakh 5,000. Then we are having gross receipt as per point number 5, 2 lakh 25,000. You can see that. And point number 6, already we have discussed, not going to be taxed. 7 is not going to be taxed. Share of income from the HUF is a exempted income. That is not going to be taxed in the hands of assessee. Now the cost also given for the respective receipt. So now I am going to write it down, the cost for the respective receipt as per point number 9. As per point number 9, we are having 12 lakh rupees cost. Then 10 lakh rupees, sorry, 1 lakh has been given in the question. 4 lakh rupees are business other expenditure. And 55,000 also is honey expenditure. After that, net profit is 7,75,000 rupees. Now, can you tell me the treatment of point number 10? After till point number 9, my income is now 7,75,000. Can you tell me the treatment of point number 10? What should be the treatment of point number 10? Is it taxable? Is it non-taxable? Whatever, is it exempted, etc., whatever it is. So can you tell me the treatment of this? Sir, we will not apply 51,000 condition in point number 6. No, Muskan, we will not apply that condition because that is not taxable at all. So if any amount which is exempted as a gift, that is not going to be taxable at all. That amount cannot be included for the checking of the limit of 50,000. Okay. Muskan is saying non-taxable. Nidhi is saying exempted. But why it is non-taxable? Why it is non-taxable? Christian Preet is saying correct. Of course, that is not her income. He is just the channel for delivering that check to someone else. So she is just a channel via this amount is going to be transferred into the hands of someone else. So that is not her income at all. So there is no exempted income. That is not an income. So technically, out of all these point number 10, my income is 7,75,000. Now you have the option. Question number 3. Now you give the answer of this question. What is going to be the total income if she opt for optional tax regime? She's under optional tax regime. So what would be the total income of Manisha if she wants to maximize tax saving? How she can maximize her tax saving in this case? What is the correct answer in your opinion of this question now? It's a very interesting question. Very, very interesting. What is the answer of point number 3? Shimpimol. Okay. Almas. I want to see the answer of point number 3. Option D. Why you are giving answer option D? I am asking the total income. What would be the correct answer of point number 3, student? Nidhi is saying B. Okay. Shagufta, एक total income बताए ना. Of course, out of these A, B, and C and D, one option would be correct now. What would be the correct answer? Option B is saying Dhanush. How it could be option B? I have just calculated the income and that was 7,75,000 rupees. So if it is 7,75,000 rupees, how the answer is 8,02,000? In this question, there was an information, there was a hint. So you can find out the correct answer. The total income will not be changed on either region. Therefore, option D. Who is saying this? Bonito Petha. Okay. Now, chalo, let me tell you the correct answer. You have to use your brain now. Why this is correct answer? Okay. Now let's play this game. The correct answer is option C. Now anyone can tell me why the correct option is option C and what is the reason behind it? Is there any information which has been given? That's why I opt option number C as the correct answer. Okay, in query portal also, Sachin Kumar was giving answer. Okay. So who will tell me why the correct option is option C? Scroll up. Okay, I have scrolled up the question. You can see the question now. If there is any information, you will find out why option C is the correct answer. Khushi has given the correct answer. Actually, you will see that in this question, there was an information point number 2, which has been given. And I told you that is an important information. All financial transactions are carried out in account pay check and TDS has been deducted wherever applicable. So there was an option under section 44 AD. The section 44 AD says either you can calculate your income as per normal procedure, which is 7,75,000. Or under presumptive taxation scheme, you can declare either 6% or 8% of your gross receipt as your profit. So that's why this account pay check information has been given. Because if the all payment has been received by account pay check, we can declare 6% of our gross receipt as our net profit. The gross receipt was total 25,30,000. If you add all the gross receipt of 10 lakh, 12 lakh, 1 lakh, 5,000, that would be 25,30,000. And if you can declare the profit at the rate of 6% of this value, the answer would be 1,51,800. So that is going to be the correct answer, 1,51,800. Understand, student? So these kind of informations is so important. They are so vital information. So you have to understand what the question require. And because the question was asking regarding it, so that is going to be the correct answer. Clear? Remember section 44 AD? So that's the beauty of income tax. Everything is so correlated. Okay. So let's solve the other question which is related to our basic concept and residential status chapter. That is question number 2. Kindly read it carefully. The question says Mrs. Smita, an Indian citizen, is in employment with an overseas company located in UAE, she is not liable to tax in UAE. Okay. During previous year 24-25, she comes to India for 121 days. So in previous year 2024-25, she was in India for 121 days. She was in India for 50 days, 100 days, 76 days, and 145 days in the old preceding previous year. That is 23-24, 22-23, 20-21-22, and 20-21. So she was in India for 50 days, 100 days, 76 days, and 50 days in these 4 preceding previous years. I hope it's clear till now. Now her annual income for the previous year 24-25 is as follows. Salary accrued or arising in UAE is 15 lakh. Income accrued or arising in India, it's 2 lakh. Income deemed to accrue or arise in India, 7 lakh. Income arises and received in UAE from a business set up in India. That is 5 lakh. Life insurance premium paid by check in India, 1 lakh. That is an expenditure. That is for deduction purpose, not an income, of course. Smita wants to pay under default tax regime under section 115 BAC. So because she opted for default tax regime, so this life insurance premium deduction would be irrelevant. From the information given above, you have to find out the residential status and total income of Mrs. Smita. So because you can see she's an Indian citizen, went for employment outside India. If an Indian citizen went for employment outside India, that is going to be included in the special case. The special case is applicable on those individuals. If you are a citizen, goes outside India for employment, etc. So if that person comes to visit India, then only first condition needs to be applicable, that is more than equal to 182 days in India. The second condition of 60 days and 365 days is not applicable in this scenario. And with the given information, you can see she was in India for the previous year only for 121 days. So this condition does not satisfy. But we have one more special condition. The special condition is for those citizen or person of Indian origin, those went outside India and comes to visit India. So even if they comes to visit India for more than equal to 120 days in previous year plus 365 days in 4 preceding previous year, then even they can be treated as resident, but their income from Indian resources, we have discussed this provision, should exceed 15 lakh rupees. So this condition would be applied only if the income from Indian resources must exceed 15 lakh rupees in previous year. So we have to see with the given information whether this exception is applicable on her or not. So this is not an income which is Indian income. This is an Indian income. This is our Indian income, and this is also our Indian income. So total of these income is only 14 lakh rupees. It's not 15 lakh rupees. And because it's 14 lakh rupees, so this condition can also not applicable in this case. And because this condition is not applicable, so that person, that individual would become non-resident. Now the status of Smita is non-resident. Now can you tell me, if she is a non-resident, out of these 4 income, how much would be her total income? out of these 4 income, which income is going to be included for the calculation of her total income. Kindly read these 4 points and give me your answer. The total income. Under section 115 BAC. Aishwarya is saying thank you so much. 371 total. Okay, so you have cleared the group, I guess. Congratulations, Aishwarya. If you've done that, brilliant. Really appreciable. Hope to see you someday. Okay. Pooja is saying non-resident, and the answer she's given 9 lakh rupees. Well done. Deemed resident, no, Tanu, she won't be a deemed resident because section 61A of deemed resident would be also applicable when your total income from Indian resources exceeding 15 lakh, because her income does not exceeding, then section 61A automatically not applicable. She is a non-resident. Okay, Shiv Komal non-resident 9 lakh. So correct answer is of course 9 lakh rupees. So those who has given the 9 lakh rupees answer is the correct answer. Well done. Non-taxable 9 lakh rupees the correct answer. She is a non-resident. The 9 lakh rupees was the correct answer. Well done. Nirmal Kumari, no, the correct answer is not 14 lakh because for the purpose of a non-resident, only 2 incomes are taxable, which is arise in India or received in India. A business set up from India, that income is not going to be taxable for non-resident Nima Luri Varshini. Okay. निधि सिंह सर मुझे नहीं समझ आया 25 लाख 30 हजार कैसे आया है समझा देंगे क्या सर अरे मुझे क्या बात कर रहे हो इतना सिंपल है जो ग्रॉस रिसिट हमने लिखी है इस वाले क्वेश्चन में ग्रॉस रिसिट कितनी ग्रॉस रिसिट लिखी थी मैंने अभी यहाँ पर अभी बताया ना ये दिस इज योर ग्रॉस रिसिट इसका टोटल है वो 25 लाख समथिंग जो आप पूछ रहे हो इसका 6% आएगा 1,51,800 दिस इज द ग्रॉस रिसिट दीज यू नीड टू ऐड बैक सिंपल बच्चों जैसे क्वेश्चन क्यों पूछते हो कल टीआरपी वाला तुमने ही पूछा था ना गुड चलो ये हो गया क्लियर आई द आंसर इज क्लियर Ishan Bisht is saying, sir, if business set up in India and some amount of income received in India, then that would be taxable for non-resident too. Yes, exactly. If the amount received in India, that is going to be taxable, whether it's a non-resident or not. Okay, next is 9 lakh is the correct answer. Most of you have given the correct answer. Very well done. Ishan Jain, sir, I'm able to understand everything, but unable to understand what the question was. I score only 25 in tax, sir. How does it matter? Look, the practice is the only solution. The more practice you will do for the same kind of question, you will able to solve those questions. For your kind of problem, when you say you understand everything but unable to understand what the question wants, so I personally believe in examination you are not able to complete your 100% paper. There must be some part of paper you are going to be left in the examination, like maybe 20 marks, 25 marks. So if you want to understand what the question demands, first of all, try to read the requirement of question. As I am reading the question, you have to find out the question requirement. So if you want to understand the question, you have to read the question from here. That exactly what the demand of question. So you will understand, I have to find out the residential status and the total income. And after that, if you will go through the question, then maybe you are able to find what information is relevant, because now I know I have to find out in question the residential status and the total income. So any other information which is irrelevant, I will skip it. I will not give any importance to that information. So that could be a treatment for you, but please try to practice more. As much as more question you will practice, that would make your preparation strong. And institute has, I guess, uploaded almost 21 or 22 case scenario cases. And in each case scenario that we are going to discuss, and each case scenario, there are almost 4 or 5 multiple questions. So if you are going to solve all those case scenario, you are going to revise full income tax, and there is more than 100 questions are there. So of course you should try that also. Asta is saying, sir, if old provision, then after deduction we have to see 15 lakh limit. If old provision, then income would be 14 lakh and deduction would have been 1 lakh. Then our total income would be 13 lakh. How it would be 15 lakh? I don't understand, Asta. Okay, so that was the question. That was our MTP. Moving on to the second MTP, series 2. This is first MTP. In this MTP series, only there were 2 questions relevant to our chapter number 1. The other faculty, those are going to take the revision classes of other head, etc. They will also going to discuss from these MTP and RTP or case scenario based questions, the relevant chapters question with you. Okay, so technically you are going to solve each and every question of MTP, RTP till the end of the revision classes. I will take the revision class of this, and then I will take the revision classes of, I guess, clubbing and set off and TDS and deductions and return filing chapter and computation of total income and tax. Okay. So moving on to next series of question. The second series. In the second series, only there is one question relevant to our residential status provision. That is question number 2A. That is, I am going to discuss with you. So we will solve this question. On 22nd September 2024, Mr. Prabjot, age 55 year, Indian citizen, left India for first time to work as a CFO in a company in Australia. So because he left for employment purpose, so special case is applicable. So condition 1, more than equal to 182 days will apply. On a vacation every year for a month to visit his brother family, he earns the following income during the previous year. Salary income in a company Australia, received in Australia, dividend from South Africa, interest, loss from business, etc. Let me see what is the requirement of question. The question is asking regarding me to calculate the total income if he opts out of the default tax regime. So under optional tax regime, we have to calculate his total income. But for the purpose of that, first of all, we have to find out his residential status. Only in that case, we will be able to understand out of this point number 1, 2, 3, 4, or 5, which we need to include for the calculation of total income. Clear? Now we have to see how many days he was in India. So he left India on 22nd of September. So that means in April 24, he was in India. So April 30 days, May, June, July, August, and September 22nd days. He was in India. So the total would be 175 days. So he does not satisfy the first condition at all. Now we have to see if he comes to visit India or not under section 6(1)(a), whether he's a deemed resident or not, or if he has come to India, if his income from Indian sources exceeding 15 lakh, then only section 6(1)(a) of deemed resident, or the special condition case in which if you comes to India for more than 120 days plus 365 days would be applicable if your income from Indian sources exceeding 15 lakh. And you can see in this case, this is an Australian income. We cannot include it. This is a South African income. We cannot include it. Interest from Indian bank. Yes, we can include it for Indian source of income. Losses from business control from India. So that is a negative thing. That is not a income. Agricultural income is exempted. So you can see only the taxable income in India is 21,000. So that does not exceed 15 lakhs. So the section 61A condition or the special condition of 120 days would not applicable. So only first condition would be checked for the purpose of his residential status. So he would be regarded as a non-resident. Now, if he is a non-resident, which income we are going to include it in his head of income? Only two incomes are going to be taxed in the case of a non-resident. If it is arise or deemed to arise in India, received or deemed to receive in India. So this income does not arise or received in India, cannot be included. So in this case, interest received from South Indian Bank in India. So this is an income which needs to be included under income from other source. Losses from South Africa controlled from India. So this is a income which not arise in India, not received, but controlled from India. This is not going to be a loss which we can include in the hands of a non-resident. So we have to skip it. Agricultural income from India is exempted. So his gross total income would be 21,000 from interest. But there would be a deduction for interest income under section 80TTA. Up to 10,000 he can claim as a deduction under 80TTA. The total income would be 11,000 in this scenario. Clear? Simple question. Let me see if there's any query from you. Non-resident only 21,000, correct answer, but the total income would be 11,000 Vidushi. Okay. Shiffy Mall, Miss Shiffy Mall is saying 21,000. GTI would be 21,000. TI would be 11,000 rupees. Clear? If this is a question of default tax regime, then our total income would be 21,000. That was the only question in our MTP, but what we have discussed, series number 2. Moving on to other cases now. Now this is an RTP question. Question number 6 of RTP. We are going to discuss this question first. It's a very good question. So the question says, Mr. Varun, an Indian citizen. Whenever there is Indian citizen or person of Indian origin, that means exceptional or special cases are going to be applicable. Engaged in consultancy business in India. Now, one student was asking, sir, I was not able to understand the question. So let me tell you again, you can read this question like this, that this is the information. And now starting from the end. So you will understand what information is relevant for my question. Determine Mr. Varun residential status for assessment year 25-26, assuming he is not liable to tax in Dubai. Okay, so we have to find out the residential status and compute his total income if he opts out of the default tax regime. That means optional tax regime question income we need to calculate. So out of these information, I will only consider those relevant information which is required to find out the residential status and to calculate our total income. So he was an Indian citizen. So I always try to mark the information which is relevant for my question. Whenever there is Indian citizen, automatically it is relevant point because that would be applicable for applying the special conditions. He shifted to Dubai in 2019 to expand his consultancy business. Business was in India, okay? He visits India every year to supervise his office in Delhi. His office is in Delhi. His stay in India for the current as well as the past year are as given follow. Very good. All the information has been given in the question. For my previous year, it is 100 days he was in India. And in the last 4 years, he was in India for these specific number of days. Now the information for income has been given. So now I have to see whether it's an exceptional case. The answer is yes. The special case is applicable in this case because he is a citizen of India and went outside India for business purpose. So he would be treated as a resident if he fulfill condition number 1 only. And you can see he's in India for only 100 days. So this condition does not fulfill. Now we will say the second condition in which if he is in India for 120 days or more and he is in India for 365 days or more could also be applicable if the income from Indian sources is exceeding 15 lakh rupees. Now you can see the income from consultancy business in India, that would be part of my Indian income, 10 lakh. Income from consultancy business in Dubai, that would not be my Indian income. Then 70,000 is agricultural income from India, that is going to be exempted. Dividend from Indian company received in India, correct? That would be my Indian income, 4 lakh rupees. Interest expenditure on investment. So that is not my income, that is my expenditure. So you can see the total income from Indian sources is not exceeding 15 lakh rupees. That is less than 15 lakh rupees. And because it is less than 15 lakh rupees, the consultancy business in India was in Dubai, but okay, this was in Dubai, but this is controlled from India. A very interesting point was there. This is controlled from Delhi office. So income from consultancy business in Dubai, it has been written, but the setup and the control is from India. And because the control is from India, so that 4 lakh is also going to be included for the purpose of calculation of that 15 lakh rupees, because this is also from Indian sources. So it is 10 lakh plus 4 lakh, 14 lakh plus 50,000 rupees. So it is not exceeding 15 lakh limit. So in that case, this condition could not be applicable. Even the section 6(1)(a) condition could not be applicable because income does not exceeding 15 lakh. So due to this, you would be treated as a non-resident. And if you are a non-resident, then out of these 5 incomes, this consultancy income is going to be taxable, 10 lakh rupees. This income cannot be taxable because you are a non-resident, and any income which is from setup from India cannot be taxed in this case. Agriculture income is exempted, not going to be taxed. Dividend income from Indian company received in Dubai, 50,000 is there, going to be add back in this 10 lakh rupees. But there is a very interesting point in this question, point number 5. Interest expenditure on investment in above shares. We are talking about this dividend income. Rupees 15,000. So we have to reduce 15,000 from my dividend income. Is there any provision regarding this we have discussed in income from other source? Is this 15,000 is deductible or not? The correct answer is no. 15,000 we cannot deduct out of 50,000 rupees income. Can any one of you tell me why it is not deductible in this case? Why? Sean is saying, sir, if he is resident and not ordinary resident, then GTI will be nil. So total income nil. In which question you are discussing this, Astha? In this question or the second equation we have already discussed? This 120 days provision does not applicable because income does not exceeding 15 lakh in this scenario, Vidushi. Income does not exceed 15 lakh. In previous question you are asking, sir, if he's a resident and not ordinary resident, I have to check it out. Where is my previous question was there? I guess question number 2A of Prabhujot. I guess you are asking about the question of Prabhujot. So if in that question he is a resident and not ordinary resident, then GTI will be nil. How GTI would be nil? In that question he was a non-resident, but if he's a non-resident and not ordinary resident, in that situation, why GTI would be nil? In that Prabhujot question we are discussing, okay? Ishan is saying that casual income, no expenses allowed. This is not a casual income, Ishan. This is dividend income. Dividend income cannot be termed as casual income. Maluri is also saying not expenses allowed. No, expenses allowed. This is not a casual income. Nidhi is saying because non-resident. No, that is not the correct answer. Dhanush is saying, sir, second point. Second point is income from consultancy business in Dubai. So this is a case of a non-resident. What is the status of our assessee? Our assessees are non-resident. In all other question also, this point was there. If it is a non-resident, only two kinds of income is taxable. Received in India, arise in India. This Dubai income is arise and receiving in Dubai, but only business is controlled from India. So this kind of income is non-taxable in case of non-resident. Dividend received in Dubai, but it is from Indian company, Shagufta, because it is an Indian company, so that would be treated as income arise in India. After reading the question, Tanu is saying I am not able to recall which provisions is applicable and not able to find which is relevant information for us. How do I know, sir? You have to practice is the only thing you have to practice the provision and question also. Pooja has given the correct answer. In income from other source, you might remember there was a provision which says that in case of dividend or interest income, the maximum expenditure could be only 20% of that income. So if you earn 50,000, the maximum expenditure you can claim is 20% of this, that could be only 10,000. So we cannot deduct 15,000, but the expenditure could only deduct 10,000. So 40,000 would be the dividend income. The total income would be 10 lakh 40,000 rupees. Okay, students? Okay. Reduction of expense of business control from India in previous year. That is not deduction, that is losses, I guess you are trying to tell me. The losses of 45,000, that could be set off from the business income or interest income. Yes, the losses of business income can be set off from the interest income in that situation, and that would result in our GTI nil. And we have to carry forward the balance loss. That would be the correct answer, Astha, if that was a resident and not ordinary resident. Got it? Vidushi is saying, sir, I am saying if total income is above 15 lakh, then also 120 days. Exactly, Vidushi. If income is exceeding 15 lakh, this condition is not applicable. But then section 6(1)(a) might be applicable. So first of all, we have to check the income. If income is not exceeding 15 lakh, then these 120 days condition and deemed resident provision both are not applicable. So before checking out the number of days, first of all, we have to see the applicability. The applicability for applying 120 days calculation is the income of 15 lakh rupees. So because if income does not exceed 15 lakh rupees, so this condition and 6(1)(a) both not applicable. So we are checking first of all 15 lakh. You are absolutely right. Even if in this case income is exceeding 15 lakh, that 120 days provision would not be applicable, but he or she could be a deemed resident under section 6(1)(a). Okay. Anything else? Sir, it is an expenditure on buying shares, which is not deducted. No, buying share expenditure would be deducted when the shares is going to transfer. That would be under capital gain. This is for collecting the dividend expenditure, etc., like commission expenditure if you are given to someone, etc. That kind of expenditure we are talking, not the share purchase expenditure. That is going to be the part of capital gain. Okay, Mr. Sunil? Ah, okay. Sure. Moving on. Now we are going to solve the case scenario basis. We are going to discuss almost 5 and 6 case scenario in which there are multiple questions, 4 questions in each cases, I guess. So we will solve those questions one by one. But I guess before that, there is a very important thing which we have to do, and that is going to take a short break. So Ashok sir, can we go for a short break? Ashok sir, can we go for a short break? I need to call Ashok sir. Just a second. Ashok sir. Sir, break. Sir, can we continue, sir? Okay, welcome back, everyone. I believe you must have taken your tea, coffee, etc. for energy. And next query is from Miss Sinchana Shetty. Sir, I have a doubt in RTP question why he cannot be considered as resident even though he fulfills second basic condition. He is in India for more than 60 days in previous year and more than 365 days in preceding 4 years. Okay, Miss Shetty, we cannot consider him for that condition. Actually, the problem is for that condition, we cannot consider it because if an Indian citizen, went outside India, if an Indian citizen went outside India for business or employment purpose, and if he comes to visit India, in that situation, the second condition of 60 days and 365 days is not applicable as per the provision. So you must have gone through with the normal case. The normal conditions are 182 days and 60 days plus 365 days. But if you are an Indian citizen who went outside India for employment purpose or as a member of an Indian ship, in that situation, only first condition would be checked. The second special condition is also there that if you are an Indian citizen or a person of Indian origin who reside outside India and comes to India for visit. So in that situation also only condition number 1 needs to be checked. So in that situation, in this question, technically that person has been gone outside India. He reside outside India. He comes for visit in India only. So only first condition would be applicable in this scenario. The 60-day condition is automatically not applicable. That's why we did not check it. Okay. Next is Pawan is asking 40,000 कैसे आया सर? 40,000 पवन ऐसे आया बेटा कि डिविडेंड इनकम वॉज 50,000. ठीक है, डिविडेंड की इनकम 50,000 रुपए थी और 20% आई गेस कितना 15,000 रुपए उस पर खर्चा हुआ है. इनकम फ्रॉम अदर सोर्स के प्रोविजन में हमने डिस्कस किया था कि एनी इनकम लाइक डिविडेंड और इंटरेस्ट ऑन सिक्योरिटी, उन इनकम के अगेंस्ट में हम सिर्फ मैक्सिमम 20% ही एक्सपेंडिचर क्लेम कर सकते हैं. ओनली 20% ऑफ इनकम. सो द 20% ऑफ इनकम ऑफ 50,000 वो कितना होगा 10,000 रुपए. जबकि एक्सपेंडिचर कितना दिखा रहा है क्वेश्चन 15,000 रुपए. तो हम 15,000 को नहीं लेंगे, सिर्फ 20% को लेंगे 50,000 के, जो बनेगा 10,000. तो 50,000 में से 10,000 का खर्चा गया तो क्या आएगा 40,000. Muskan is asking, sir, please explain May MTP series 1, question 1, MCQ 3 again. Muskan, we do not have that much time that we are going to discuss the same question again and again. This is on YouTube. You can scroll back the video and you can see that solution again and again, multiple times. The question number 1 in short. I guess that is for, you're talking about that question of Manisha. Manisha, question 1. Manisha question. The third point was very simple. It was saying you need to calculate his total income for minimizing his tax amount. So when we calculate the net profit, it was 7,75,000 rupees. So in case of business, if your income does not exceed the specific percentage, or if your turnover does not exceed 2 crore rupees, then for any business, you have an option of presumptive taxation scheme under section 44AD, which says that if you want, you can declare your income at 6% or 8% of the gross asset. So in this question, because the amount has been received, all amount has been received in checks, the question has mentioned that. So you can also declare your profit either 7,75,000 or you can declare your profit 6% of gross asset. The gross receipt was in that question was 25,30,000. So 6% of 25,30,000 would be 1,51,800. So that would be the lower income. So that is the income we can show for paying tax. So if you want to understand the question more clearly, please read section 44 AD provision. So you would understand what exactly and how we exactly did that. Nidhi is asking examination paper का solution नहीं मिलता है. Why are you asking this kind of question in this revisionary class? So now we are going to discuss. Astha is saying means second special condition applicable first. One is for employment and second is for 15 lakh limit for citizen or of Indian origin. No, Astha, there are special condition. There are technically three special condition. One is for person who is going outside India for employment in the previous year. Then first condition would be checked. If any person who is a citizen or POIO reside outside India, but he comes to visit in India, he normally reside outside India, but comes to visit in India, then first condition 182 would be applicable. That 60 days condition would not be applicable. But now the third special case says if somebody is residing outside India and comes to visit, and if his Indian source income is exceeding 15 lakh limit, Indian source income exceeding 15 lakh rupees, then the condition of that 60 days or 365 days would be replaced. Then he needs to check two conditions, 182 days, or the second would be now 120 days in previous year and more than equal to 365 days in 4 preceding previous year. So you have to see this 120 days condition when the income from Indian sources is exceeding 15 lakh rupees. Understand? Kushi is saying, sir, for this question, if we were required to calculate tax payable, then will partial integration of agricultural income and non-agricultural income would be applicable? That would not be. In which question you are talking about? This RTP question number 6 you are talking about, Kushi? This 6 number question? Yes, of course. If in the question it has been asked to calculate the tax, then the integration provision would be applicable if the conditions are satisfied. So the condition was it should be an individual HUF, AOP, BOI, etc. So in this case, your non-agricultural income should exceed the basic exemption limit, which is exceeding in this case, and your agricultural income should exceed 5,000 rupees. That is also exceeding in this case. So the tax need to be calculated as per integration provision for sure. So now we are going to discuss case scenario basis questions. The first case scenario based question we are going to discuss, and that is for the members of crew, the crew members. The question says Mr. Shashikant aged 45 years. In this sheet, this I guess 45 years is an Indian citizen and a member of the crew of a Singapore-bound Indian ship engaged in carriage of passengers in international traffic departing from Chennai port on 29th May 2024. So if you are a member of an Indian ship, then for calculating that how many days you are in India, the calculation needs to be done like this. Total days 365, and you have to reduce for number of days he is outside India. So if you reduce out of the total number of days in a year, the days he is assuming outside India, the balance days would be treated as stay in India. And for calculating the number of days he is outside India, we have to start from the date of entering into the continuous discharge certificate in respect of joining the ship. From this time duration, from 29th May 24, you have to assume that he is outside India till the continuous discharge certificate in respect of signing off. So from the joining the ship till the signing of the ship, this time duration needs to be considered as he is outside India. So from 29th May 24 till 19th December 24 number of days you have to calculate by including these days. The day of joining the ship and the day of signing off needs to be included as outside India. So if you will calculate all these days, the number of days would be 205. The remaining number of days is 160 days. And because he is going outside India as a member of crew, so only first condition would be applicable as per special scenario cases, that is more than equal to 182 days in India. And because he does not satisfy that condition, why? Because he is in India only for 160 days. So he would be treated as non-resident. The first question was, what is Mr. Shashikant residential status for previous year 24-25? So the correct answer would be non-resident. Now the question, what would be the total income of Mr. Shashikant? Because now he is a non-resident, so only two kinds of income is going to be taxed. One, which is arise or deemed to be arise in India, and the other, which has been received or deemed to be received in India. Now the other information, he stayed in India for last 4 previous preceding year 24-25 for 400 days and 750 days in 7 preceding previous year are irrelevant because he is a non-resident. He received salary of 7,20,000 rupees in his NRE account maintained with State Bank of India, Chennai branch. He also furnished you the following details regarding his income. Dividend declared by Axe Limited, a Singapore company. The same was received by him in Singapore. So because he is a non-resident, so this income is not going to be included in his total income. Clear? Next. Agricultural income from land in Pakistan received in India. So because income is received in India, so that income is going to be taxed in India, 2,50,000 rupees. Rent received from house property in Chennai, 3,60,000 rupees. So can you tell me, is it going to be taxed or not? And if yes, what amount of income is going to be taxed in this scenario? Can you tell me the correct answer, students? Please read carefully and then only answer. Please read very, very carefully. Let me see who is giving the answer. Miss Khushi Gupta is saying, yes, very well done. 3,60,000 is the rent received from house property. And when there is rent received from house property, the 30% would go in the standard deduction out of this value. So the remaining 2,52,000 rupees would be income from house property for the purpose of taxability. The agricultural income from Pakistan is not going to be exempted because for the purpose of agricultural income exemption, the land should be situated within India. So that 2,50,000 is also going to be taxed in this scenario. Very good. Dhanush is saying 2,45,000. No, Dhanush. Tanu was given the correct answer. Pooja also gave the correct answer. Vidushi also give the correct answer. Shifmol is also give the correct answer. Total income would be 5,02,000. Ishan Bisht also gave the correct answer. 5,02,000 would be the correct option in this case. Well done, students. Most of you have given the correct answer. Pawan, your answer is wrong, beta. Bharat is saying correct answer. Very good. Miss Ranjani, 5,02,000 is the correct answer. So the correct answer for the purpose of total income would be option number C. That is going to be my correct answer. The 2,50,000 and 2,52,000 from income from house property. Now the question does not end here. Now the question says, assume for the purpose of answering this question that Mr. Shashikant has transferred this property in Chennai to his minor married daughter on 1st April 2024, and his wife is a housewife and does not have any income. The minor married daughter received the rent from the house property. In such case, what would be his total income for assessment year 25-26? If he has shifted out of the default tax regime under section 115 BAC, so that means he is under optional tax regime case in this scenario, then you have to give the answer. In case of income from house property, there is a definition of deemed owner. I believe you must have gone through with this definition. Deemed owner under section 27. And it says that if suppose Mr. A transfer any house property, any building to their minor child without consideration, then Mr. A needs to be treated as deemed owner of that property. Remember, students? But there's an exception which says except in case of minor married daughter. So that means if Mr. A transfer his house property to a minor married daughter without consideration, then Mr. A would not be treated as deemed owner. Then Mr. A would not be treated as deemed owner. He will not be treated as deemed owner. She is going to be treated as the owner of that property. So whatever income she will earn, whether it's going to be clubbed in the hands of Mr. A or not, we have discussed this provision in clubbing provision. I am asking you, I just want to know either you have remembered those provision or not. So in this scenario, in this question, because Mr. A has transferred this house property to his minor married daughter. So the rent earned by minor married daughter, whether that rent is going to be included in the hands of Mr. A is going to be clubbed or not. You have to answer this. So let me see what is the answer you are giving. Kirti is saying, okay, 5,02,000. Jayendra is saying, yes, that should be clubbed. Okay, Ishan Bisht was giving the answer. Pavan Kumar, okay. Miss Shifty Mall is saying, yes, income need to be clubbed. Good. Same as she is a minor daughter, clubbing provision. Well done. Pooja is saying clubbing provision would be applicable and section 1032 exemption could be claimed. Well done. Very well done, Pooja. High five from Wi-Fi. Okay. So clubbing would be applicable. And when there would be clubbing, then there could be an exemption of section 1032, which says 1,500 rupees or 1,500 rupees or the amount of income clubbed, whichever is lower. So because she is the deemed owner, if Mr. A would become the deemed owner, then clubbing provision would not be applicable. Suppose this is not minor married daughter. Suppose this is minor son. or a normal minor daughter. If that is a minor son or daughter, then clubbing provision would not apply. A would be treated as deemed owner and full rent is going to be taxed in the hands of Mr. A. That full rent is 2,52,000, I guess. But because due to deemed owner is not Mr. A, deemed owner is minor marriage child. So now due to clubbing provision, this rent is going to be clubbed in the hands of Mr. A. And because that is going to be clubbed in the hands of Mr. A, so Mr. A can claim the exemption. So out of this rent of 2,52,000, I guess that was 1,500 rupees exemption would be there because we are under optional tax regime. That 1,500 rupees exemption is not applicable in case of default tax regime, but we can claim it. So that would be 2,50,500. And the correct answer would be 5,500,000 rupees in question number 3. So that is very, very interesting question. I hope you understand, students. So when there is clubbing and if there is a optional tax regime, you can claim section 1032 exemption. Well done. Now the question, Mr. Shashikant wants to minimize his tax liability and consulted to compute the amount of same for previous year 24-25 accordingly. His tax liability rounded off would be. So we have to find out his tax liability with both options. Optional tax regime because he wants to minimize his tax liability. The question does not say that you have to calculate tax as point number 3. No, they are asking for to minimize your tax liability. Optional tax regime or default tax regime. So we have seen according to optional tax regime, the income would be 500. This would be my total income. And on this income, I have to calculate the tax accordingly. Okay, this is not as per point number 2, we have to calculate the income, not as per point number 3. So we have to take the income 5,02,000 rupees. On 5,02,000, if you are going to calculate your tax as per normal slab rate up to 2,50,000, that would be nil. Then balance 2,50,000, it would be 5%, 12,500. And then on balance 2,000, 20%. The tax would be 12,900. The 4% cess, we cannot claim rebate because income exceeding. I have already told you in the basic concept chapter. Always use this format to calculate tax. Tax minus rebate plus surcharge plus cess. So if you follow this format in each question, you will not going to forget about rebate concept. So when you will write down rebate, you need to recall the provision, and because income exceeding 5 lakh, so there would not be any rebate concept there. 12,900, 4% would be your cess, that is 516. The total would be 13416, and if you round it off, it would be 13420. If that is optional tax regime. If that is a default tax regime, for income of 5,02,000, we have to calculate tax. Up to 3 lakh, there would not be any tax. The balance 2,02,000 would be taxed at the rate of 10,100. Then there would be cess of 4%, 404. In this question, you will see the assessee was the non-resident. So we are not giving rebate to it, not due to income exceeding 5 lakh, because that is a non-resident case. Rebate can be only be claimed by individual if you are a resident. Even if in this case the income is less than 5 lakh, we cannot claim rebate because he is a non-resident. So in this case, we are not claiming rebate in this case because he is a non-resident. If you round it off, that would be 10,500 rupees. The correct answer would be option number C in this case. Okay. Puja tax would not be nil because he's a non-resident, so you cannot claim the rebate in this situation. Okay. So that was case scenario number 1. We have the detailed solution also. You can go through with the solution, the calculation, everything is there. Now moving on to The next case, which is including the questions regarding basic concept and tax calculation and residential provision. This is case number 3, case scenario 3. Mr. Kishan is engaged in the following activities on agricultural land situated in India. Total area of land is 5 acres. Activity A. He grows sapling or seeding in a nursery spreading over on 1 acre land. The sale proceed of which is 5 lakh. Cost of plantation is 1,40,000. Basic operations are not performed for growing sapling or seeding. So the net profit, if you will see, out of this 5 lakh, the net income he is generating is 3,60,000. The question is this. The first question, of course, whether the amount of income arising from activity A would constitute agricultural income in the hands of Mr. Kishan or not. So you have to answer first this question. So the income we arise or income we generate via nursery business, is it going to be an agricultural income or not? What is the correct answer? What amount of income A would constitute agricultural income? So from activity number A, we have to give answer whether it's an agricultural income or not. And if yes, what amount would be treated as agricultural income in this case? Yes, the income from sapling and seeding is going to be treated as agricultural income, whether basic operations are performed or not. So the question, a correct answer would be, what amount of income arising from activity A would constitute agricultural income in the hands of Mr. Kishan? What is the correct answer, student? A, B, C, or D? Give me the correct option. Should I write it down A, B, C, or D? Which is the correct option? Kindly write it down the option. Option number C is the correct answer. Exactly. Option number C is the, because the question is not asking. Somebody has just said nil. That's why I asked. The question is not asking about the taxability of income. The question one is asking what amount need to be treated as agricultural income. So if you did not read the question wisely, so you might be going to take point number A because you might be thinking they are asking about the taxability. They are not asking about the taxability. They are asking about what should be treated as agricultural. So correct answer is option number C. Okay, now the activity B provision. From activity B, we also need to give our answer. How much is going to be agricultural income or how much is going to be non-agricultural income? Now activity B says he grows cotton on 3 acre land. 40% of cotton produced is sold for 4 lakh rupees. The cost of cultivation of which is 2,25,000. The cost of cultivation of balance 60% cotton is 337,500 and the market value of the same is 6 lakh, which is used for the purpose of manufacturing yarn after incurring manufacturing expenses of 1 lakh. The yarn is sold for 8,50,000. So now there is two part of activity B. One is 100% agricultural activity. So he grow cottons, the 40% portion. 100% means this 40% is 100% agricultural activity. In this 40% of cotton part, there is no non-agricultural activity. So if that is an agricultural activity, we need to take the selling price over here. That is 4 lakh rupees. And the cost of cultivation is 2,25,000. So that is my net profit. That is 1,75,000 and that is pure agricultural income. So this 40% activity, which is just to produce cotton and sell it in the market, that is complete agricultural activity and whatever profit there is, that would be constituted as agricultural income. Because the question asks this, if you see the question is what amount of income from activity B with respect of sale of cotton would constitute agricultural income or business income in the hand of Mr. Kishan? The correct answer would be A. So the 40% part in which we sold out the cotton only, that is going to be my agricultural activity, and the agricultural income would be 1,75,000. Clear? Now the balance 60% part, what he does, he grow cotton but does not sell in the market. He converted it into yarn via manufacturing activity, and he sold yarn in the market. So that kind of question we have discussed in agricultural income case. Like you produce sugarcane and then you manufacture sugar from those sugarcane and sold into the market. So if there is any activity which is involving agricultural and non-agricultural, both kind of activity, in case of other than tea, coffee, rubber, and tea, coffee, and rubber, roasted coffee, and rubber plant cases, because for those we are having a specific percentage. But for other than those cases, if there is any other agricultural activity involving non-agricultural activity also, so for that purpose, we have to make two separate profit and loss account or trading P&L account to calculate the agricultural and non-agricultural. One is need to be full agricultural activity considering, and one is for non-agricultural or manufacturing activity included. The balance 60% cotton part is 3,37,000. The cost of cultivation is 3,37,500. And the market value, the fair market value, if he sold this cotton into the market, he will recover 6 lakh. So the balance net profit would constitute as your agricultural income. We have gone through with this provision and with practical example also, that would be 2,62,500. So out of this 60% activity, 2,62,500 would constitute agricultural income. And when we calculate non-agricultural income, the sale of yarn we need to take, that is 8,50,000. Whatever would be your FMV in case of agricultural activity would become the purchase price in case of non-agricultural activity case. 6 lakh would become your purchase. And the other manufacturing expenses has been given in the question, 1 lakh rupees. So the net profit would come 1,50,000. That would be treated as non-agricultural activities. So out of this 40%, the full value is agricultural activities. Clear? And just a second. Out of this 60% part, the agricultural income would be considered 2,62,500 and the non-agricultural income would constitute 1,50,000 rupees. Now we will see the question. Number 3, what amount of income from activity B, that means that 60% part, in respect of sale of yarn constitute agricultural and business income in the hands of Mr. Kishan? So you can see the correct answer would be 2,62,000 would be your agricultural income and 150 as your business income. I hope it's clear. This would be clear if you go through with the provision ones. If you have any confusion, kindly go to the provision ones and the example we have solved for this kind of case. You can watch the class also, the full class in which we have discussed this provision in detail, and you will be able to understand the solution process. Okay. Now the C case, the C activity, land measuring 1 acre is let out to Mr. Ramesh on a monthly rental of 15,000, which is used by Mr. Ramesh as follows. So we have let out our land to Mr. Ramesh at the rent of 15,000 per month, out of which 50% land is used for agricultural by Ramesh and 50% land is used for non-agricultural purpose. So we are receiving 15,000 rent, out of which 50% is from activities using by the tenant for agricultural purpose. We are not using it for agricultural purpose. We are receiving rent. And the land, what we have given on rent to the tenant, he is using 50% for agricultural activity and 50% for non-agricultural activity. So the rent, whatever we are receiving, if you have remembered, the definition of agricultural income first point says any rent or revenue from any property held in India used for agricultural purpose is going to be treated as agricultural income. So the part of rent we are receiving from agricultural activities is going to be treated as agricultural income, and this is going to be your taxable income. That was case number 4. What amount of income arising from activity C constitute agricultural or otherwise in the hands of Mr. Kishan? So 90,000 is going to be agricultural income. D is the correct option, and 90,000 is going to be taxed as taxable income under income from other source. It's a rent of land, so it cannot be treated as income from house property, and there is no standard deduction also. Now, on the basis of above, the question asks, compute the gross total income of Mr. Kishan for the previous year, assuming he has no other income. So if you go through with the provision, the 1,50,000 was the business income from activity B. And from that rental income, whatever rent we are receiving was 90,000. This is income from other source. This is PGBP income. So total income taxable would be 2,40,000. The correct answer would be option number A. I hope it's clear, students. Yes, there is a business income 1,50,000 rupees. Correct option, Miss Akusabanu. Correct answer 240. Well done. Agriculture income 175, business income 160, for balance 60, and agriculture income is 2,62,500. Vidushi, correct answer. Well done. Okay. So this is clear, students. So now we are moving on to our next case, the case scenario number 6. Page number 21. This is our case scenario number 1. So this is a question of house property merged with question of residential status. So all the information is not relevant for us. We are going to solve only point number 1 of this question. The question in which we have to find out the residential status of Ananya Gupta for assessment year 25-26. So let's consider only that information which is relevant for our residential status concept. And Ananya Gupta is a citizen of India, lives with her family in New York. So she resides in New York, okay, and is a citizen of India since year 2000. She visited India. So if any person is a citizen of India who reside outside India comes to visit India, only first condition out of the basic condition, 182 days in India is going to be applicable. That 60 days condition does not applicable. 60 plus 365 days. Yes, that special condition could be applicable, which is more than equal to 120 days and 365 days if the income from Indian source is exceeding 15 lakh rupees. And also section 6(1)(a) condition of deemed resident could be applicable in this scenario. So this condition has been gone. Now we have to check these 3 conditions on the basis of information given in the question. Okay. So on September 2024, take care of ailing mother. In the last 4 years, she has been visiting India for 100 days every year to be with her mother. She came to India on 21st of March 24 to September 2024. So we have to see from April 24 till September 24. How much time she was in India? So if you calculate, that number of days would be 30th of April, May, June, July, August, and September, 28 days. So that would 181 days exactly. So she was in India for 181 days in the previous year. So that means she is not fulfilling this condition. And because she is not fulfilling this condition, so we have to go and check the other condition requirement in this case. Either this condition could be fulfilled or this condition. So for applying these condition, we have to see whether his income is exceeding 15 lakh rupees or not. So for that purpose, we have to see the income information on randomly basis. If I will check it out, you can see the municipal valuation of properties 4,20,000, which is from India. The expected rent of the house, that was outside India house, so we cannot consider it, of course. Then you can see she has taken a loan, etc. So you can see there is a house rent area also 3 lakh rupees. Even if we consider 420 and this 3 lakh rupees, that would be approximate 7 or 8 lakh rupees. So that cannot exceed 15 lakh scenario. So because that 15 lakh scenario cannot be exceeded, so she would be treated as a non-resident on the basis of the information we have received. Okay. So the correct answer would be option number D. Any confusion? $181 days, correct, Vidushi. So 2024 leap year. Yes, Dhanush, 2024 is leap year, but we are taking financial year 24-25. Our previous year is 24-25. That will start from April. So we do not need to consider the February 2024 in this case. So do not need to bother about it. If we need to take the days from 23-24, then that could be included as a leap year. But for our purpose, we have to take from 1st April 2024 till September. There would not be any Februaries there. Okay. Yes, 181 days, Miss Shifmol, non-resident would be the correct answer. Well done. So that was our case scenario number 6. Now moving on to case scenario number 13 on page number 46. Again, in case number 46, we have to solve only part 1, question 1 of this. This is our case scenario number 13, because the other part is regarding the salary calculation. Narendra Sharma, age 54 years, an Indian citizen. Very well done. Carrying on retail business in Dubai. So he reside in Dubai. He frequently visit India. So because he is a citizen of India and visiting India, so first condition 182 days would be applicable. 60 days would not be applicable if his income from Indian sources is exceeding 15 lakh rupees. Then that 120 days condition or section 61A we are going to check. Otherwise, only this condition would be there for finding out the residential status. Okay, he came to India on 3 December 19 till 26th of April 2022. So if you will see the calculation for different years, I have already made that calculation for previous year 1920, for previous year 2021, for previous year 21-22, for previous year 22-23, and previous year 23-24, and our previous year 24-25. So in our previous year 24-25, he was in India. He came to India on 27th of November and he was in India till March. So from November, if you will consider the number of days, that would come 4 days of November, then December, January, February, and March. So total number of days would be 122. So he is not going to fulfill this first condition. Now I need to check whether this income is exceeding 15 lakh rupees or not. If that is not exceeding 15 lakh rupees, in that scenario, I am not going to check other condition. Now, if you will see the basic salary from India, you can see the basic salary from India is 2,75,675 rupees. So that is more than at least 30 lakh rupees. So he is having income from India more than 15 lakh. And because the income is exceeding 15 lakh, so I have to check now this condition also. So for this condition, the full condition says in previous year, you have to be more than 120 days in India plus in 4 preceding year, you have to be in India for 365 days or more. So he is in India for 122 days as per the information given. You can see that. He was in India for 122 days. So this condition has been satisfied. Now I have to check in the preceding 4 years, how many days he was in India. And on the basis of information given in the question, for 23-24, he was in India for 56 number of days. For this, he was in India for 124 number of days. For this year, he was not in India for a single days. And for this year, he was in India for 26 number of days. So this is less than 365 number of days. And because it is less than 365 number of days, so this condition also away. Now we have to check the third condition. The third condition says visit is irrelevant. We do not need to check any number of days. You just need to check whether Indian source income exceeding 15 lakh and he's not paid tax in the country he reside. So he was in Dubai and the question gives you the information that there was no tax in Dubai. He is not liable to pay any tax in Dubai. So due to fulfilling of section 6(1)(a) condition, the days are irrelevant now. Whether he is in India for 0 number of days, irrelevant. Because he is a citizen of India and he is residing outside India, having income from Indian sources more than 15 lakh and does not pay any tax in Dubai. So he would be directly called as a deemed resident. And all deemed resident would be not ordinary resident, resident and not ordinary resident category. So the status of Mr. Sarthak would be a resident and not ordinary resident as per the provision. So the correct answer would be deemed resident because we do not have that resident and not ordinary resident option. So the correct answer would be deemed resident under section 6(1)(a). You got this question, the very interesting and very good question also. Ishan Bisht is saying, sir, in previous year 24-25, won't we take 27 November 2024 in India? We are considering it 27 November 2024 in India. These days will be, of course, we included. You can see in the solution. If you want to know, he was in India on 27th of November. So I have considered 4 days of November, 27, 28, 29, and 30. So we have considered it. How it would be 5, Ishan? November is for 30 days, not 31 days. So if you consider 27, then it would be 4, 27, 28, 29, 30. Got it? Okay. So in previous year, 125 days number. How it is 125 days, Krishan Preet? Deemed resident was the correct answer. Okay, good. Ishan is cleared now. He understood it like this symbol. Okay. So that was our case scenario number 13. Now moving on to our next case scenario, that is question number 20. In question number 20, we need to solve, I guess, 3 questions. Okay, Mr. Zucaro, age 42 years, a Singapore citizen. He's a Singapore citizen. So that means all those exception has been gone. No need to apply that 120 days and 365 days. No need to apply the deemed resident case. It's a now simple question. Both condition would be applicable. The basic condition, more than equal to 182 days in India, or more than equal to 60 days plus 365 days in India. There is no concept of 15 lakh income, etc., etc. Everything has been gone. For business purpose on a regular basis. So because you're Singapore citizen, so both condition needs to be applicable. In the first time 20-21 for 270 days, 21-22 190 days, 20-23 145, 23-24 155. In the current year, along with his family, had come to India on 10th August for a pleasure trip. His family returned to Singapore on 31st August 2024. However, he stayed back on complete some business commitments and then returned to Singapore on 17th November 2022. So we have to find it out. How many days he was in India in 24-25 from 10th August till 17th November. So from August till 17th November, if you will calculate, that would be 100 days. Before this year, the last 4 years, number of days he was in India was 155. 22-23, it has been mentioned, 145. 21-22, he was in India for 190 days. And 20-21, he was in India for 270 days. Clear? So, because he was in India for 100 number of days, so he cannot satisfy the first condition. But in previous year, he is in India for 100 days. So he is more than 60 days in India. And for last 4 preceding previous year, he was in India for 760 days. So that is exceeding 365 days also. So this condition is also being satisfied. And because this condition has been satisfied, the second condition has been satisfied. So he will become a resident of India in this case. Now, if you become a resident, then we have to find it out. Whether you are a resident, ordinary resident, or resident but not ordinary resident. There are 2 conditions. We have to check it out. For this case, less than 730 days in 7 preceding previous year. How many days he is in India? Even in last 4 years, he was in India for more than 730 days. So this condition does not fulfill. Or the second condition which says he must be in India as a non-resident for equal to or more than 9 years out of 10 preceding previous year. You can see in these 2 years, he was in India for more than 182 days. So if anyone in India for equal to or more than 182 days, he would be automatically resident. So because for these 2 years, he was a resident in India. So no need to check any other year residential status. Because now this condition cannot be fulfilled. Automatically, he would be treated as a resident and ordinary resident in India. I hope it's clear. You can see the option number A is your correct option. Any confusion in this? Very good question. This is also a very good question. Shan Bist is saying Zucaro is a resident and not ordinary resident. Now he changed his answer. He will be a resident and ordinary resident. Yes, he will be a ROR. Okay, got it. Now the second question is saying, assume for the purpose of answering this question only for this question, assume kar lo. Kya assume kar lo? That he is a non-resident in India. So if he is a non-resident in India, would income from 8,75,000 earned through activity of procuring raw material for manufacturing unit in Singapore is taxable in India or not? Now there's a good question. We have to read the question to answering this thing. Now the question says Mr. Zucaro owns a manufacturing unit in Singapore. He basically comes to India for procurement of raw material. So he procure raw material from India. He has appointed Mr. Manish as a dependent agent in Mumbai who procure raw material from India and then export it to Singapore to his manufacturing unit. Then sell the finished product there. An income of 8,75,000 was received in Singapore out of this activity. So technically, the question is asking regarding this activity that suppose he is a non-resident. For answering the question number 2, suppose if he is a non-resident, whether this 8,75,000 going to be taxed in India or not. So if he is a non-resident, only two kinds of income is going to be taxed in India. One is income arise in India, the other is income received or deemed to be received in India. So does this 8,75,000 falls in the definition of arise or receive? Even if we have exactly solved this kind of question, when I have discussed the provision of residential status in our normal LVC class, we have discussed this kind of provision. So I believe those who have attended that class would be able to answer this question very easily if they revise the provision yesterday. Whether this income is going to be taxed in the hands of Mr. Zucaro or not. Ms. Shipmol is saying no. Why? Why it's not taxable, Ms. Shipmol? Dhanush is saying yes, sir, it should be deemed to actually rise in India. Okay. Tanu is saying non-taxable. Okay, the correct answer is non-taxable. I need the reason why it is non-taxable. We have discussed this kind of example and this provision in chapter 2. So if you are going to give me the answer, now give me the answer for reason. Astha has given the correct answer. Astha is saying no, for export only he is procuring. Exactly correct. So if somebody is procuring any material from our country for exporting purpose, technically for exporting purpose, he is not generating any income from India. He is technically paying to someone in India. So there is no income arising from that activity. So if you earn any income from trading activity from India, that is not going to be taxed in the hands of a non-resident because it is for the purpose of export. Well done, students, who have given the correct answer. So the answer of point number 2 would be no. Now there is a question regarding capital gain. You need to calculate the capital gain. So that question we are going to skip because that is not for our chapter 1 or chapter 2. Now, would income earned from agricultural land given on lease is taxable in the hands of Mr. Zucaro? So we have to read the provision. What is the agricultural land provision? The question is here. Mr. Zucaro has also purchased an agricultural land in India and leased it out to a tenant. The tenant shares a portion of his agricultural income with Mr. Zucaro as a consideration for rent of land every year. The share of income from land for the previous year was 6,50,000. You have read this provision, student? If you have read this provision, then now the question is whether the income which is received by Mr. Zucaro as a resident and ordinary resident, is it going to be taxed or not? Whether this income is going to be treated in the hands of Mr. Zucaro as an agricultural income or not. If it is agricultural, that is going to be exempted. If it is not, that is going to be taxed. So what is your opinion regarding this income? Okay, Ms. Shipimol is saying agricultural income. Ms. Akusa Banu Mansuri is saying yes, taxed. So according to you, that is not agricultural income. If you're saying it's taxable, then that is not an agricultural. Asta is saying agricultural income. Krishna Preet is saying no, it is exempt. Okay. Nidhi is saying, I think agricultural income taxable. Okay, thank God, not taxable. It would be agricultural income and exempt, said by Pooja. Tanu is saying agricultural income. Harshada is saying agricultural income. Ishan Bisht is saying agricultural income, of course, because that kind of question we have just discussed. If the tenant is using it for agricultural purpose, then it's going to be agricultural income. Muskan is also saying agricultural income. Yes, Muskan, correct answer. So if the tenant is going to use, then your rental would be automatically agricultural income. Almas is also saying agricultural income. Well done, students. So the correct answer would be option number D. Sorry, not D. It is going to be A. No such income is exempt because that is an agricultural. So the last question is case scenario number 21. In that case scenario also, we just need to solve the first question, which is regarding the residential status. What is the residential status of Mr. Rajan for the previous year 24-25? We have to find it out from the given information. Okay. So let's see. What is the question? Mr. Rajan, age 62 year, is an Indian citizen. Whenever there is Indian citizen or person of Indian origin, those special cases exception is going to be applicable. Reside in Delhi. His wife Sheetal and daughter Ria also reside with him. Okay, Ria, age 16 years, studying in 12th standard in DAV school at New Delhi. No relevant information for the purpose of status. Rajan left for employment. Now, this is an important information. If a citizen left for employment, then only first condition is going to be applicable. 182 days in India. That 60 days condition is now irrelevant in this case. On 15th September 2024, 15th September 2020, he left India. His family did not accompany him. He returned to India on 25th March 2021. Mr. Rajan had gone outside India for the first time in his life. Before that, he was always in India. During April 24 to September 24, he was working with a multinational company in Delhi. He earned salary of 14 lakh from his job in India. He paid tuition fees of 180 for Ria's education. Apart from that, he is a professional income of 60 lakh. Gross receipt 90 lakh from India. During the year, he also earned interest income, etc. So we have to find out his residential status. So because he is going outside India, the number of days he was in India, we have to find out. And April 30 days, May, June, July, August, and on 15th of September, he went. He came to India on 25th March also. So from 25th March till 31st of March, number of days, 7 needs to be included also. So that is 175 days. Because it's 175 days, so this condition does not satisfy. Then we need to move on to the other special condition, which says if you come to visit India for more than equal to 120 days plus 365 days in 4 preceding previous year, or a concept of deemed resident under section 6(1)(a) need to be applicable if your income from Indian resources exceeding 15 lakh. In the question, you can see his income is 14 lakh from salary and business income is 60 lakh from India. So that income is exceeding 15 lakh rupees. So because income is exceeding 15 lakh rupees in this scenario, then we have to check whether this condition of 120 days has been fulfilled. And if you will see, the income of 120 days, time duration is exceeding 120 days. And he is coming to India. But in this case, you can see he did not come to visit India. he went outside India. He did not come to visit in this year. So because if somebody is outside India and reside there, and if he comes to India for visit, in that situation, this 120 days condition would be applicable. Because he went outside India in this year and he is having income more than 15 lakh rupees. And as well as in Dubai, there is no tax paid by him. So in that situation, he would be treated as deemed resident. And a deemed resident would be treated as point number D, deemed resident, but not ordinary resident in India, because a deemed resident would always be treated as a not ordinary resident in India in this situation. That was our case scenario number 4. Yes, Kushi, correct answer you have given. So we have discussed all the scenario cases. Out of these 21 scenario cases, the total number of case scenario is 21. Those relevant for your chapter number 1 and chapter number 2. We have gone through with all those provisions, as well as we have solved RTP question and MTPs, also series number 1, series number 2. So I believe after solving these numerical, you must have a clarity regarding how to solve this kind of question in the examination. So if you have any more query, you can ask me, student. Otherwise, we are going to close this session. So if you have any query, you can go for it. Vidushi asking, sir, why 120 days condition not applicable? Because that condition is for those person who reside outside India already and come to visit India. In this situation, Mr. Assessee, Mr. Rajan, went outside India in this year. So if somebody is permanently residing outside India and he comes to India for visit, for that purpose, 120 days condition is applicable. So in this case, that was not the case. He went outside India for the employment in this year only. So permanently, he is not residing outside India before this previous year. That's why we did not apply 120 days condition. Muskan is saying, thank you very much. You're welcome. Nidhi is asking, option choose करने के बाद reason भी लिखना होता है. Yes, of course, you have to explain. You can see that case scenario basis answer that must be uploaded on the portal. You can download that and you can see how to answer these questions. Asta is saying, sir, if a person who is employed in India company and that company sent him outside India for some branch, then employment special condition applicable outside India. If he is sent permanently, suppose he is sent for some assignment work, then this would not be applicable. The intention should be permanently sent outside India, and we do not know when he's going to come back. So if that is a case, that when an assessee is going to outside India, when an individual is going outside India permanently, then in that case, a special condition need to be applicable. But if it is for training purpose, or if it is for some assignment basis for some short duration, that special condition would not be applicable. Shan is saying, sir, I have been practicing question with full-fledged format. So I would like to ask for your advice as to should I solve all question with full-fledged format, or I should solve in rough and solve only question that I have doubt in full-fledged. Of course, if there is any question, you can solve it rough and you are having the correct answer of that question. You do not need to, for practice purpose, you do not need to solve that in full-fledged. For those only question you are having some doubt, some problems, you try to solve those question in full-fledged format. That would be really helpful for you, and that will actually going to save your time also. This question paper given in portal, I believe that must be on your portal. You can go and download these MTP, RTP, etc. Everything has been available at portal. Any more query from anyone? Miss Kirupaha is saying thank you. Welcome. Priyanshi is saying, but sir, to improve speed, we should solve full flash again and again. Yes, you have to, like, I guess in the last class, ma'am also told you that you have to give mock test paper near your branch, whatever CA branch you have near. You have to go there and you can give your mock test paper there. If it's not possible, you have to be very disciplined at your house. Please make a time schedule for your examination for your test purpose. For 3 hours, you have to be very disciplined and just prepare yourself like an examination environment there. You should not cheat yourself. That is more important. So the more you will practice, your speed will increase, your confidence will also increase. So that is not the case. You are not going to solve in the examination only the questions. You have to solve those questions within a specific time limit also. That will also differentiate between a successful student and an unsuccessful student. So solving is not matter. Solving those questions within a specific time frame, that is also a very important thing. So time management you will learn if you try to give full question paper in a certain time limit. So I guess there is there is no more query. Okay, there is Arshada is asking something. Arshada is saying, sir, there any standard time to solve 15 marks or 10 marks question? That's a very tricky question. In a 3-hour paper, when you have to solve two parts, income tax as well as GST. So for a 10 marks question, I believe you should not take more than 30 or more than 25 minutes. So if you are taking more than 30 minutes for solving a 10 marks question, that is going to create a problem for solving other questions. So only practice will help you in this thing. But how you need to see a question, and there is of course a proper way to solve the question paper also that we would discuss in the last class of revision. That would be, I guess, on 30th, after 30th of July, I believe, or on 30th of July. That would be in that question. I could discuss with you how to solve a question paper in a systematic way. Anubhav is saying practice is the king. Yes, very well said, Anubhav. Exactly. Jayendra Pokle is saying 1.8 minute for 1 mark. Yes, you have to manage your time not like this. You have to understand the 50 marks paper. I need to solve it in 1.5 hour. And for 1.5 hour, you have to divide in short this time duration. So that's a very tricky thing. And it's not only the knowledge, you have to be there to manage the time, you have to handle the pressure. So if any student is able to handle the pressure, maintain the time, and of course the knowledge, of course. So if these three components will work together, you would be able to crack the paper. So I guess now we can close the session. So Ashok sir, can we close the session? Yes, yes. Okay. Good night. Thank you.